The future belongs to those who dare, those who will do extra. Hi, I'm Mark Croskery. Welcome to Business Live Extra, the program that looks beyond dollars and cents to the movers and shakers in business. Let's meet our guest today. Our guest this week has over 28 years experience in financial services industry, holds an M.B.A. from Columbia University and a Bachelors of Education from the University of London. She is a certified investment manager and holds qualifications from the Canadian Securities Institute and the Canadian Investment Finance Institute. Before her current role, she worked with the Barita Group, where she held various positions. Passionate about service and education, and is the chairman of the STEP Center, a school for children with multiple disabilities. And she's a founding and executive member of the Pension Funds Association of Jamaica. Our guest today has been the managing director of BPM Financial Limited for over 10 years. It's Peta-Rose Hall. Peter,
Hi,
welcome
Mark.
to the show.
Good to be here.
It is great to have you.
Thank you so much.
All right, Peter, I've always viewed you as an enigma. You are a quiet wonder, and you've been educating Jamaica society and really doing big but quiet things at BPM for decades. And it's exciting. I'm so happy to have you on Business Live Extra, BLA today, to get to know more about you and to get Jamaica to know more about you. You've been shining, but very quietly and humbly.
Thank you for having me, Mark. It's a pleasure to be on. Pleasure to have this discussion with you today. I've been shining quietly. I really am passionate about investments, and I think that the role that we play at BPM is really essential in terms of financial education for our investors. We do a lot of that because I found that over the years I've realized that Jamaicans, they need some help with financial literacy in order for them to really maximize their returns and to expose them to more than just buying fixed income instruments, and to get into the world of ownership, ownership assets, like stocks, like shares in companies.
Yes.
And so we've made it part of our DNA in the company and part of our mission to really empower our clients. Right. And to be able to inform them and to help them to make better money management decisions.
Right. And Peter, if we dial it back a bit, is there anything that you'd say has made you into who you are? There's always sayings that say money doesn't like noise, and you've done it quietly. You've grown a great business. You have 2 branches now. But right. Is there anything, whether it was in your childhood, mentors, your parents, that has made you this in a way quiet giant, or done your persona to do it this way?
Right. So I think that I'm a believer in compounding, right? Okay. And I think that things compound over time, and that your experiences lead you to where you are, right? And it's a kind of layered approach. So if you look back at my life, I started out doing an education degree. I really wanted to teach. Right? Okay. I wanted to teach children. I specialized in teaching children 5 to 7.
Yes.
But when I came back from university, I spent 5 years studying in the UK. When I came back from university, I really wasn't happy with what I thought where I thought the state of education should be in Jamaica.
And was your mom a teacher, or was anybody in the family a teacher that led you to?
My grandmother, but not direct parents, no.
Was anybody pushing you to, say, do a bachelor's in teaching?
No, my mother was really against it. She kept saying to me, teaching doesn't pay. So when you choose these occupations, she realized I had a passion for it. So
you wouldn't have any savings to go and invest or anything?
Well, that's it. So while I was waiting for an assignment abroad, I had applied for an assignment abroad. I took a summer job. At Barita, and my assignment was really to be the gopher for the trader. So I would go to the stock exchange with the trader and record all the trades and answer the phone, take orders, and so on. And I think that just ignited, that opened a whole new world to me. And I remember when I was 16, actually, with one of my relatives, we went to the stock exchange in New York. So I went to Wall Street. And I think just, you know, having that memory and putting that together with that experience in the summer.
Did you take a picture with a big bull, or did you jump on a big bull? Or
No, I didn't.
No?
But I observed the trading floor. I was in the gallery and observed the trading floor and all the happenings on the trading floor. So I had an idea.
Yes.
I had an idea, and you know, Rita Humphreys-Lewin is my aunt. So when she owned Barita at the time, and I said, you know, I just wanted a stopgap. And that's really where it started.
So when you mentioned that whole kind of hoot and holler system and, you know, being the gopher, were you actually having to drive, say, between New Kingston and Harbour Street in those days? Or
so
how did you move the paper? Or how did you move the trades?
So in those days, we had to fly from where we were located to Bank of Jamaica. The stock exchange was a physical location on the 3rd floor.
Of the central bank?
Of the central bank.
Okay.
And you know, all the traders gathered there on the trading floor. Okay. We had a gallery and people were in the gallery every day. And yeah, it was exciting.
Really, Barita, you know, as I said, they're the oldest stockbroker.
Right.
So they would have been the first.
But there were people on the floor at the time that don't exist anymore, like Pitfin Mackay and
yes.
So
this is where you got your feet wet, Peta-Rose, and got everything. So this is where the passion started and the energy.
Right. So yeah, I enjoyed it. I enjoyed it, and it opened up a whole world that I hadn't really thought about. And
contacts as well, relationships.
Yes, I think the best thing for me at the time was just being able to observe legendary investors. There were legendary investors, people who were constantly buying shares. I think one thing that fascinated me is, you know, there's a tendency in Jamaica to think that if you're wealthy, you don't invest your money. You're sort of enjoying your money. A lot of wealthy people were buying shares in those days.
Like disciplined investing.
Yes.
And from your experience, were you seeing them buying shares, let's say, continuously, monthly or quarterly, or just one time?
All the time. Or constant. And it was continuous.
And on that point, how do you buy in or do you not buy into the comment that, okay, well, let's say wealthy investors, they always have a surplus, and let's say the average person doesn't have a surplus, so they can't invest?
Well, I think that the average person probably has less to invest, but it doesn't preclude them from investing. I think what I learned from the process was that you can accumulate over time, and their process was about accumulating positions over time.
And you got to meet these people and see how they transacted business.
Yes, you interacted with them because they placed orders with you. They told you what companies they were interested in, and basically you were told to buy. Right.
And after that phase, Peta-Rose, did you had your connection with Rita, you got your stomping ground. What happened after?
So after that, I realized that I worked for a few years, and then I realized I don't have a business degree.
Okay.
Right? And I believe that, you need the skills. So I said, let me go off and do an M.B.A. and actually applied to Columbia, and they accepted me. And I went off to Columbia.
Which means you're brilliant.
Well, I work hard at it.
Yeah. Because persons do say, it's not the best business degree that makes you brilliant. Sometimes it's actually teachers, medicine, and engineers. You'd always hear that comment actually from a lot of smart investors.
When you get to your MBA class, you realize that people come from such diverse professions. Yes, dentists. You wouldn't think a dentist would be in your MBA class. We had a lot of engineers. Turns out a lot of people who go through engineering school end up doing MBAs in America. So that was
and
interesting.
why'd you come back to Jamaica and not stay overseas or abroad and get a bigger salary like what a lot of Jamaicans have done?
So a friend of mine he was English. He was in my MBA class, and he was interesting because he owned a few radio stations at the time. Asked me that
in Jamaica?
No, in the UK.
Okay.
Asked me that very question. Why don't I stay and work on Wall Street? And I said to him, well, the thing is, I'm a woman, right? And Wall Street is very male.
Give us, what timeline was this now? This was in
This
the...
was late 80s, early 90s. And I said to him, I think I have a better chance in Jamaica.
So for sure, Wall Street, heavily male-dominated.
Heavily male-dominated. And a lot of my friends in the class were going off to investment banks. So they were, you know, heading to Wall Street. And in fact, the thing with Columbia is that they bring a lot of guest tutors in from Wall Street.
Okay.
So we actually had, you know, professors who would do, and even heads of companies would come in. And there's a lot of interchange between the business school and the business community. Okay. So you get a lot of exposure. Somebody like Jack Welch, who headed GE, he came to lecture us. Yes, to guest speak.
Okay.
And you know, so it was, I remember the head of tax at Ernst & Young at the time, he did a whole course on international taxation, which I took and so on. So I think the exposure, it was wonderful,
right.
You know.
So Peta-Rose, you really got, you know, framed, you know, your ideals came together at Columbia. You came right back to Jamaica after?
I came right back to Jamaica after.
And formed BPM immediately, or did you jump into...
So I worked for a few years, and then an interesting thing happened. You know, Jamaica goes through waves of migration, right? Okay. And so there were people leaving somehow around that period, and they would say, well, we don't want to sell our shares, so would it be possible for you to just oversee them? To, you know, let us know.
Like a kind of custodian almost. And
like, you know, it's kind of semi-manage them. And at the time I thought, well, it was quite a few clients, and I thought, well, maybe this is something that's needed. And I have an interest in long-term money and invest in long-term, because one of the things about brokerage is very transactional, as you know. So yes, you build up relationships with clients, but it's not the same as when you manage money for clients.
So maybe you found that there was in your early days, you found everybody was very like instant, wanted to be wealthy today.
That's it.
But you were taking a long-term, patient capital approach.
Patient capital.
Not just the money, but to your clients.
Right.
And people.
And it's more, to me, it's more interesting because you can do a lot more. Because expectation really is not to earn today, but to create wealth over the long term. So you can take long-term positions. And so that was really what piqued my interest.
So in a way, Peta-Rose, you were taking long-term positions in people, not just necessarily, I mean, the portfolios or the stock positions.
Correct.
And it has clearly, it's paid dividends for you.
Absolutely. It makes a day fascinating because, as it tells people, no 2 days are the same.
Yes.
No 2 days are the same. And as you know, in the investment world, there are always opportunities. So and it's a creative process, believe it or not. It may be for people listening, they think, oh gosh, investments, it sounds hard. It's not hard. You know, it's not hard once you understand the concepts.
Right.
So the creative process is it's like making a cake. You know, I'm going to combine these ingredients together so that I can get a particular return. Right.
We're going to talk about that next and how you got BPM started. That's the exciting part. And we take our first break on Business Live Extra. More when we return. Welcome back to Business Live Extra. BPM Financial Limited is a privately owned investment company and was founded in 1993. The company is currently licensed as a securities dealer, investment manager and pension fund administrator, and is regulated by the Financial Services Commission of Jamaica, the FSC. In September 2011, BPM opened its sub-branch in Montego Bay. The company provides investment advice to individuals, corporations, and pension fund trustees. Their core philosophy is that each person can invest no matter their income. Our guest is the Managing Director of BPM Financial Limited, Peta-Rose Hall, and we are talking with her about the company's evolution. Peta-Rose, welcome back to Business Live Extra.
Thank you so much, Mark.
It's good. So you started, 28 years ago or so.
Right.
It's been a long time.
It has been.
Yeah. Well, we want to hear the juicy stuff. How did you get this business started?
So as I said, we started with a few clients, and they were individuals mostly. But when I was working in brokerage, one of the things we used to do was we used to advise on pension funds and their investments. So I thought it would be good to, be the investment manager of pension funds. And so I started to look around to see if I could tender on some of these jobs so that I could offer the services. But in the meantime, fortuitously, one of my colleagues in the office saw this ad in the paper. It was around the time of the debt swap program. I don't know if you remember that. And
I was like a baby back then, so you gotta enlighten me and tell us what was it like.
Well, it was the U.S. government was swapping debt, Jamaican debt, and the funds, they would say how the funds should be used, and they wanted an environmental foundation to be set up to, help with environmental projects. And so they were looking for an investment manager, and they put an ad in the paper, and I decided to tender, to apply with the tender, and I was one of 2 investment fund managers selected. I was pretty early on in the game. I think we were only 2 years old. So I felt proud at that moment.
Was that like your first big win in a corporate world?
That was my first big sum of money to manage, because it was $30 million at the time.
And in those days, early 90s, when you managed money, was it like advisory fees, or call it management fees, or how did you earn in those days?
Well, management fees, because we were given that amount of money and asked to design a portfolio. And it was a long-term fund, so that was right up our alley, and it was exciting. Because they were new and we were new, and we got to work with their team very closely. And so that was, and that fund grew. I mean, they're still a client today, and that fund grew to well over $1 billion. So it was...
And so it's back to your point of investing long-term in a client.
Absolutely. It works, and you have to remember that if you compound your return, they weren't taking off money. So it was like a closed-end fund, meaning there was no disturbance. So if you just imagine a pond with no stones thrown in, nothing happening, the ecosystem underneath the water is pristine, right? So it was the same thing.
Same thing. And Peta-Rose, if you compare those days to where you are now, was it less competitive then? Is it ultra competitive now?
I don't find the markets ultra competitive in Jamaica, and I don't think they've ever really been. I think that different players were around then. Some of they don't exist anymore. But I don't find the market ultra competitive in Jamaica. I think that we don't have that much competition, really. I think there's room for growth in terms of we need to bring more people into the investment space, because too few people really do investments.
But let's say your experience like in 93, ad or call it an RFP, do you think you can pick up a portfolio like that nowadays, or is there really no kind of what we would say is new business out there, like a new client or a new fund? Is it just everything's kind of gobbled up, and you got to kind of more take business from somebody else, or they have to take business from you? Is the market a bit saturated in that sense today, compared to the 90s? Yeah,
I guess you would say that. I guess I would agree with you. It is a little bit, in terms of that. You remember too, Mark, that one of the problems in Jamaica is we don't have a lot of pension business, in the sense that only 10% of the population saves for retirement. So think if we had, when I say population, I mean working population. Think if we had more people forming pension funds, more people in the pension space, it would expand the market, because there will be more long-term money. And the market really needs to be sustained through long-term funds. Because when you have a downturn in the market like now, where's the buying?
And in 93, when you started BPM Financial, were you a young entrepreneur, you had to kind of hustle and bring in multiple shareholders to raise the capital? Was it your own money, if you can say, or how did you get it going? Did you have to find an anchor investor?
No, it was our own capital at the time that we did.
Was it a bit easier, like the capital standards were a bit less back then?
Right, so I think BPM came around before the FSC was even formed.
Okay.
So, but the FSC came in, I think it's about 95 or 96, early 90s. And then all the investment managers and people in the financial space had to be registered. So went through a whole registration process then.
And how did you get the idea to start? I mean, yes, we know your roots at Barita, but how did you make the idea to say transition from, say, working with people, working in businesses to, I'm going to be this entrepreneur now. And even though it's in the financial space, but, to become an entrepreneur.
I didn't think of it like that. I didn't think, okay, I'm going to step out into entrepreneurship now. I just, I identified a need. And when you're young, Mark, you don't have a lot of fear, right? So you don't think of it like that. I didn't even think about, oh gosh, I'm kind of stepping out on my own. I saw the market as having a lot of potential. And I would have people, friends, say to me, how did you know to become a stockbroker? How did you find out about, so it made me realize that they didn't know about that. They didn't know about buying shares. They didn't know about investing in companies. They didn't know about long-term investing. And so I saw that the market had a huge void. And even today, I think there's a lot of room for development because we don't have, our investing community is too small. Our investing community is too thin.
So was it Peta-Rose, was it out of the demand, your friends, colleagues coming to you for, say, stock advice? Or just investment advice? You saw
there was some of that.
Yeah. There
was some of that. Friends and colleagues asking, people who worked in maybe banking or related who were not directly involved in our field, but was sort of on the periphery, and people who were professional who wanted to invest.
Okay.
Yeah. So, there was that, and just kind of looking at the limited services that we're offering at the time made me realize that when you look at developed markets and you look at the process that they've been through, that there was a lot of scope for development.
So you and BPM largely started off as B2B, business to business, pensions. When did you make that jump or decision to start moving a little bit more into retail or individuals? So
individual portfolios, we always, originally we started with individual portfolios and then we became very institutional based. And I would say somewhere around late 90s, early 2000s, we were more geared for individual portfolios because we recognize that people want to invest, but they don't necessarily know how to do it. And they don't necessarily have the skill set and they don't necessarily have the time. And I know from being in the transactional space of brokerage that one of the kind of dissatisfaction people have always expressed is that, yes, I have a few shares here and there. Yes, they've bought in IPOs, but they don't do much more than that.
So that's what's unique or different is you're not a brokerage, right? BPM is not a brokerage.
No, not yet.
Right. So it's not necessarily transactional, but you're really creating and managing portfolios.
Right.
Right.
We're creating investment portfolios, and we are asset mixes, really, and we are, catering to the individuals who want to invest and want to build assets for themselves. Because what people tend to do is they buy a few shares here and there, but they're not really long-term investors. So I'll give you an example. So a client came to us maybe about 16 years ago.
Okay.
And she had her pension lump sum, but she's not at retirement age. So she thought, well, I'm going to work for a few more years. I need to invest this money. But she might not have that skill set, time, interest, and so on to do it herself. So she came with 4.6 million, and 16 years later, she has 23 million.
Incredible, yeah.
So that's through one of our portfolios.
And in general, I would say as an industry complaint, or I've heard it a lot, is just that, as you said, brokerages are transactional. And sometimes clients don't understand that brokerages, because they're transactional, they always complain they get lost in a brokerage. But there's a difference between a brokerage and a managed portfolio, or as you said,
Absolutely.
a portfolio. You know, in the US, it's very clear. You know, you go to TD Trade or wherever you go to. But the reality is there's a big difference between brokerage and a portfolio.
So I'm glad you brought that up, because I think what people expect is for the broker, after the initial advice and the initial transaction, they expect the broker to follow up with them.
Contact them monthly when there's really a big difference.
That's it. Because a lot of people don't realize, having gone through a broker and done a transaction, they're their own investment manager. They're on their own.
Once the
transaction is finished. Yes, absolutely.
Right. We're going to talk about that next. Thanks, Peta-Rose. And we take another break on Business Live Extra. More when we return. Welcome back to Business Live Extra. Through the use of innovation, creativity, and technology, BPM Financial has delivered strong gains for its clients through enlightened investment planning, which have yielded solid returns on investment. Annual average growth rates for its portfolios range from 10.66% to 20.54%. BPM manages global portfolio of stocks, which has consistently exceeded the performance of the S&P index for the past 6 years. And they're committed to educating Jamaicans in the process of how wealth is created. More from the Managing Director of BPM Financial. Peter, welcome back.
Thank you so much, Mark.
You're welcome. More on that whole point, we're really getting into it, is so with you also saying, you know, that it's clear there's a difference between brokerage and portfolios. If I'm an individual, or any individual comes into your Kingston location, your sub-branch, Montego Bay, is there a minimum, or is there no minimum to jump into a portfolio? So
what we have done is we've realized that minimums can be barriers, right? And we really want more and more Jamaicans to invest, because when you have assets, it's empowering. And one of the problems I find is that for many, many Jamaicans, they work their whole working life and they don't have much at the end of it. So we have a minimum of 100,000 Jamaican dollars, okay. Right? And we say to our clients, we encourage you to add, because by adding, you know, you can do it incrementally. We tend to, in Jamaica, think that you have to have a large amount of money, a large lump sum, to start investing. But the truth of the matter is, not many of us can get that lump sum together.
True. And can you add at any time, or do you have to?
Anytime. And I like when people think about their salaries like this. A certain portion of it should be invested.
And is there a minimum you have to add? Like, does it drop to, say, I don't know, X, like 10,000, 50, or is it 100 each time?
Well, you know, the truth of the matter is, I think once you start with 100, I don't really say to you, I don't nickel and dime you. I don't really say to you, oh, you can only. I work with the client. I work with the client. Because the truth of the matter is, I've seen many of them add to their accounts over time and build up a lump sum.
Nice. Okay.
Right? And the whole idea behind it is to make investments accessible. One of the faults of the industry is, I think, there are a lot of barriers to investing. And people put, you know, high minimum opening amounts. And it really, maybe from a business sense, it makes more sense to them. But from a personal, individual standpoint, it limits how many people can really get into investing. And the truth of the matter is, at the end of the day, I always say to my staff, all of us are human beings, and we're going to go through the same process. We have to work, we have to earn, we have to invest. At the end of the day, our working life comes to an end, we have to retire. What are we going to retire on?
And do you, Peta-Rose, actually, whether it's you or your advisors, you actually show them kind of a roadmap to retirement, or you actually show them a full-blown financial plan?
What we say to them is this. We say to them, look, the number one nightmare for investors is inflation. And I find that in Jamaica, we don't let people know that. So they invest very conservatively, and then inflation undermines the purchasing power of their dollar. And at the end of the day, whatever they have managed to put together in terms of assets, it doesn't go far enough.
It's well said. Do you find your advisors almost have to break it down to show them that, like, these food prices that all Jamaicans complain about, that is really inflation? Because
Yes.
inflation is a word that so many persons just don't understand.
We did good thing you said that. We did a little exercise where we looked at bread prices.
Yeah, because in the US they have the Big Mac index. But
That's right.
In Jamaica we don't have a patty index.
We need a patty index.
Yeah. So you could
But
start
the
one.
bread, right, I could. The bread thing was really powerful because we realized $1,000 back in 2004 would buy 12 loaves of bread.
Nice.
And now it only buys 3.
Yeah, that's
So
a
we
good
say
Instagram
people,
ad for BPM.
Yes,
Yeah.
we say to people, if you do not grow your capital and stay ahead of inflation, you're going to have a problem. No. Is that comfortable
And you
for
find
people?
that really resonates with the clients?
Well, it resonates, but as I say to them, you have to do what you have to do to make your money grow. One of the reasons why we do managed portfolios is because we wanted to distill all the elements that will lead an individual to success. One of the things people do, which is detrimental, is when markets go down, they jump out.
Yes.
And when markets rise, they jump in.
Mm-hmm.
So they buy and sell at the wrong times, right? And it causes frustration because they're not really making any money. So when you have a managed portfolio, because we're in the business, it doesn't scare us when markets fall. In fact, we see it as an opportunity.
Yes.
Right? It's a buying opportunity. But very few individuals have the gumption or the guts to buying down
To stick
markets.
with it and stay with it.
So when you have an investment manager like a BPM Financial, we're going to be disciplined. And discipline is part of it.
And that's what's different with the managed portfolio and the brokerage.
Absolutely,
Yeah.
absolutely.
What's the typical managed portfolio like? And does it have a certain number of stocks, whether it's minimum, maximum, or like if it was an equity portfolio, for example? What's it kind of like, or what's the vibe of it like?
Okay, so in our equity portfolio, we tend to have a lot of dominant companies in the portfolio. We tend to mix
Like a blue
growth,
chip, a big
blue
Jamaica
chips,
company.
Blue chips, tried and proven.
Solid business.
Solid businesses. We tend to balance income.
When you say tried and proven, like a proven investments would be in there, or you just mean like a blue chip?
Grace Kennedy, Seprod, companies, big companies.
So
that have
your
had
clients
track
can
record.
identify with them.
Yes, and that have had a track record. You're buying the future, right, when you buy stocks. So part of buying the future is to look at where the company is coming from and look at the management and look at, all the changes they've made over time and what their plans are for the future, that kind of thing.
Do you find BPM, or on behalf of your clients, do you dabble in the junior market much, or you stick into the main market?
So we do have some junior markets, but a lot of it would be main market.
Main market. Gotcha.
Not that there's a problem with the junior market. It's just liquidity issues sometimes because the junior market tends to be less liquid than the main market. And sometimes you have to rearrange your portfolio. So you want to have that built in as well. Also, you find that a lot of established companies are going to have a dividend track record. So you want to pay attention to that because you're balancing income and growth all the time. And so all these elements come into the whole.
The play.
Yeah, how you construct your portfolio is important.
And across the board, Peta-Rose, how many portfolios are we talking about here, or how many different managed products?
So I'd like to say it's asset mixes, right?
Okay.
So we have the fixed income, which is more a bond portfolio. We have the balanced portfolio, which takes half your money, puts in bonds, half in stocks. And then we have equity. Now, the equity portfolio is more or less straight equity, right? So it's really meant for people who have long-term growth. But over the past 21 years, an equity portfolio is compounding at 20% per annum.
Wow.
Which means that if you use a rule of 72, every 3 years, that portfolio is going to more or less double.
Double your money.
Right.
Yeah.
So the bonds portfolio is compounding at 15.5, and the bond portfolio at 10.5. Now, a lot of people don't pay attention, Mark, to inflation. And inflation over the past 21 years is running at about 8.5%. So if you have been investing in bonds only and you're yielding 10.5, it sounds great on the surface of things, but when you take away 8.5 from 10.5, you find you've lost most of your purchasing power through inflation. So I want people to focus on that. The thing about managed portfolios is that every day, we focus on those things.
You're looking at them, right?
We know.
And so when you use the word mix, is it like, okay, a client can therefore get, say, 30% in the balance, 30% in the fixed income? Is it that you give them a mix of each one, depending on as you ascertain it?
So depending on what they want to achieve. So somebody will come in and they'll say, they want to save for retirement. They want to have some assets at retirement. So if they have a long time horizon, meaning a long time for that money to work, so say they're 40 and they're not retiring for another 25 years, 25 years, go for equity.
Right.
Right? Because it's like a no-brainer.
So if I want to, I can say, Peta-Rose, I want to go 100% equity. I'm aggressive. I mean, also, the client can elect for what they want.
Yes, they do. But remember, we're going to have a conversation with you.
Absolutely.
Because a lot of times the client doesn't know what they want. Right? And you, through the conversation, you help them to understand what are the things they need to focus on. Yeah. A lot of people who come in don't know they need to pay attention to inflation. A lot of people who come in don't realize that it's not a quick ride, right? In Jamaica, one of our, I think there's a national problem with discipline and there's a national problem with impatience. Wouldn't you say?
I mean, the instant gratification.
Absolutely.
Yeah.
So they think that you can make this thing quick, and it doesn't work that way. And so we have to bring the client along through a conversation with the client to explain to them how this would work. Right. And I think that's one of the differences with BPM. We do like a mini presentation when you come in.
Is it like a assessment or risk profile / assessment?
Right. It's a conversation, and we say to you, this is what we recommend, and this is why we're recommending it.
Yeah.
And that we will walk with you. But one of the problems is, there's a trust factor, and you have to recognize that we're the specialist. Now, we're not saying you're not the client and it's not your money, but at the same time, lean on us and lean on our expertise.
And so, Peta-Rose, with the branches, I mean, M.B.A is logical. We've got our capital cities and so forth, but BPM 1993, M.B.A expansion 2011. What led to M.B.A? Was it just, it was always in your brain and this was a logical next move?
I think
is it to capture more market share?
Is a growing city, and it made sense because the workforce there is growing. They have a lot of development through hotels, BPOs, and so on. So, and you're from M.B.A, you can actually service other points along the coast. You could capture some of the tourism, the BPO clientele, and their needs for financial planning? Absolutely. Okay. So, but the thing with BPOs and tourism is there are a lot of young people, right? The turnover. And the turnover. And the problem with young people is they don't realize the power that they have. Now, what do I mean by that? I was going to ask you what's... So what I mean by that is that they don't have money because they've just started their working life, but they have time. And as I tell young people all the time, people kill for time, right? So the thing is, you have time. So one thing you can't buy back is time. And people can't get time back. And when they get older, they say, boy, if I knew this, where was BPM when I was 20? If I had known this, I'm now 50 odd, 60 odd, I can't go back to 20 odd. So time and compounding work together, right? And how you gain wealth over time is through compounding. So if you are young and you start early, remember Warren Buffett started at 11. You're going to be way ahead of the game. You're going to be way ahead of the game. You can just close your eyes and invest. You don't even have to think about it. It's such a no-brainer. We're going to come back to that and your favorite word, compounded. I like that. We take another break on Business Live Extra. More with Managing Director Peta-Rose Hall when we return. Welcome back to Business Live Extra.
Peta-Rose Hall and team are committed to building Jamaicans' assets even during periods of uncertainty. BPM underlined the importance of spending time in the market. The company provides opportunities that help maximize investor value and provide optimal returns as trusted investment managers. For a final time, it's Peta-Rose Hall of BPM Financial Limited. Peta-Rose, welcome back.
Thank you so much, Mark.
Yeah, no, so it's been so exciting talking about portfolios and where you see it. With COVID now and this whole pandemic pinch, how has it impacted you at all? You know, it's impacted all of us and everybody, but have you seen a hit, whether it's on your bottom line or just the vibe in the office, working from home more, but any changes to BPM?
So last year, in March, when COVID hit, we did the adjustment like everybody else, you know, where people worked from home. Some people came into the office. It was a time of just reassessing where we are and trying to figure out how we were going to realign our portfolios because, of course, the markets went down, both abroad and locally. But fortunately, in the global market space, that market rebounded. And that really made a difference to our bottom line. We did quite well last year, actually, off of that market. With our portfolios returning, well, in excess, you know, over the last 6 years, we've managed to beat the S&P 500. So I think on average over the last 6 years, our global portfolios are about 18 to 19% per annum. Per
annum, okay.
Which is pretty good. And yeah, we were able to really make good use of good buys when the markets dipped last year, and when it rebounded, our investors were able to profit from the gains. So that really helped a lot. In terms of working, what we found was we had just done a renovation at our head office, so we were able to space people out appropriately, and those people who could work from home, they had the laptops and the equipment to do so. So I think we did the transition fairly well. Once we got over the shock of COVID landing on us.
And the stock exchange has really, it has stabilized. I mean, the indices are up double-digit year to date. So the market has kind of come roaring back so far.
It has.
So that's a good sign.
I think the results of companies have been reasonably good too, here and abroad. So people adjusted, companies adjusted, and we managed to come out of the difficulties which were really kind of impacted the first quarter.
Yeah. The big debate is on, we even see WeWork rebounding in the US after it's having its issues, but the debate is on about work from home, and in Jamaica we're a bit behind digitally. But the thing is you go around to even some of the financial houses, or if I go around and I notice some of them are only probably 30% capacity and they have so much square footage that's empty. Do you have any plans maybe to shift your work environment, or once things normalize, you think you'll just bring all your capacity back to head office?
So we've already brought most of our capacity back to head office.
Really?
Our IT group works from a different location, but the rest of the staff, they've pretty much come back. We've been able to provide social distance spaces. We have all the protocols in place. We haven't stopped seeing clients over the many months of COVID. If you notice in the US, Goldman Sachs, JP Morgan Bank, they're all calling for their staff to come back.
Yeah, we saw Jamie Dimon come out pretty aggressively saying that he pretty much hates Zoom meetings and he only wants to do one per week.
I think the thing with investments, Mark, is this is what I've heard in my office. Collaboration is important.
I mean, just isolating face-to-face totally is a bit of a turn-off.
Right, and you want to be able to bounce things off of people. So something happens today in the market and you want to be able to say, run over to your office and say, what do you think about that? Do you think we should, adjust our position in that particular company because it just had this news that came out? And, it's very dynamic. And it really can't wait till the afternoon when we have a Zoom meeting. And I think that's what he's saying. That's what people in the financial world hate, because we need to bounce ideas off of each other. And I always tell people, investments don't wait on people.
That's true. Timing.
So timing is important. So if I phone you up today and say, Mark, you know, would you like to buy a particular share? It's not going to sit waiting on Mark to make the decision. You have to decide on the spot, are you interested or not?
Price could move 10% tomorrow.
The price will move, other buyers will come in, and so on. So,
and of course, not speaking for the whole financial sector, but you know, the banks have made huge changes in Jamaica already. You know, some have gone more and more cashless and digital. Do you think this pandemic, though, and whenever things do normalize, that it will change, though, maybe for the commercial banking space in Jamaica?
So, I think that the banks will try and satisfy customers' needs digitally. I don't think we're going to be lining up in the bank as we did before, because I think it's more cost effective for them to do that. One of the issues, though, with that is that you lose the human touch. You lose that contact with the client, you know, that you don't get through a call center, or sometimes when you call some of these places, you don't even get an answer. So I think that's one of the problems with being so digital, is that you isolate the customer and he doesn't really feel connected to you. So, you know, we never stop seeing clients, and clients come to the office all the time. They just have to obey all the COVID protocols that we've put in place. And it has worked. It has worked pretty well. Well, I think when COVID started, though, one of the differences is that the clients, they weren't sure if it wasn't a case of the world coming to the end, right? And so panic reigned.
Right.
And we had to do quite a bit of work through newsletters and stuff.
The communication.
To communicate.
So BPM communicated a lot to the clients.
We really stepped up our communication.
And your stakeholders, yeah.
Absolutely.
And on that point, Peta-Rose, do you see, you've been around 28 years, you're one of the few independents or private companies left. Any thoughts, or as you're launching these, you know, portfolios, you're branding a bit more, marketing a bit more, any thoughts on the stock markets or going public one day, or the goal is to stay private?
No, I think that eventually we will go public. I think we want to get to a certain stage. We want to evolve more. We want to develop our product line more. As I think I'd mentioned in a previous conversation with you that, you know, I really want to create different types of asset portfolios to offer the Jamaican investing public more choices.
Because you're doing it differently. I mean, a few brokerages have managed portfolios, but it's not really their focus. You're doing it differently in the sense you are really doing at your core managed portfors.
Yes, we're doing it as
it's a different ethos. It's a different model.
Thinking. Absolutely.
And it has worked. Yeah.
It's worked, and I find it satisfying because I can see people grow, and clients' assets grow, and you feel satisfied that you have helped that client to really achieve their goals and to develop assets, and they're not on their own.
And that's really the best feeling. I can see looking at you is when you get that win-win, or the client recognizes the company.
A client
BPM.
wrote me maybe 2 weeks ago, a long-standing client who was retiring when she got into her 50s, and she's a business owner, and I think she's close to 70 now, and she wrote me an email recently, and she said, I just want to thank you for advising me all these many years. And that's
lovely.
That's very satisfying, because I'm telling you, Mark, it's hard work.
Yeah.
We work very hard on our portfolios. I tell people when they're dressing in the morning, I'm watching, as I wake up, I'm watching the international news. I'm watching the markets abroad, I'm watching.
You focus on the markets and the clients.
Yeah.
Besides the point you mentioned about possibly one day, you know, looking at the public markets, 3, 5, 7 years from now, where do you see yourself as Peta-Rose Hall, BPM Financial, any other things? And you sit on a few charities as well, and you're giving back, but where do you see yourself and BPM?
So, you know, how I see BPM is that BPM has a very good team, right? So we have people working with us for a long time. And
so low turnover and staff count of roughly what's the size?
50, 48, 50.
Okay.
I think we'll evolve. I think we'll grow. We have we have staff members there who they know clients by name. They know their voices when they call. They know they know where they started and where they are now in terms of how their portfolios have evolved. And I think it's a testament to the company that we've been able to not just keep clients for so long, but keep staff for so long. And I think that, you know, even though over time we'll evolve and we'll get larger, I don't think we'll lose that intimacy and that close contact we have with our clients, because it's sort of baked into the way we work with our clients. I'll give you a quick example. You know, people call and they'll say, well, the markets are down now and I think we need to withdraw some money. And we'll have a whole conversation with them. You know, you call up other places and say, fine, when do you want your money, kind of thing. And we'll say to them, well, remember what you wanted to achieve. I remember that conversation we had when you first came into the office, and we'll remind them. And then they will...
You're holding them accountable in a way, in a positive way, a good way.
Absolutely. You know? And we're sort of saying to them, well, you know, we can't just throw out the baby with the bathwater because something happened. We have to keep going, because a lot of investing revolves around perseverance, right? Patience and perseverance. And I think it was Warren Buffett that said temperament is more important. The most important criteria for success in investments is your temperament. So if you can encourage a client to be patient and wait. With
their emotions and helping them.
And manage their emotions around money more carefully, they'll have a better level of success. And that, I think that's the role we play, because we're not just managing in a disparate and dispassionate way. We're helping you to manage yourself
and
as
achieve
well.
their goals.
And so that you can achieve.
Yeah. Peta-Rose Hall, thank you so much. It's been fantastic having you. And BPM,
Thank you,
a real true financial advisor.
Thank you so
Jamaica.
much. It has been such a pleasure.
No, pleasure as well. That's it for another edition of Business Dive Extra. Remember, business opportunities are like buses. There's always another one coming. We've been talking with Peta-Rose Hall, Managing Director of BPM Financial. Don't forget, you can watch us online at cvm.com/business/Business Dive Extra. Thanks for joining us.